This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, February 29th, 2016. Euro dollar. So it appears a period of correction in the euro has come to an end, with the market now deferring to consideration of a broader resumption of the downtrend following this latest breakdown below 110. The 110 psychological barrier has been broken, and some previous resistance has been broken, and this opens the door for a retest, an acceleration back towards the 2016 low from early January at 107.11, which guards against more significant support in the form of the December 2015 low at 105.21 further down. From here, look for any rallies to be very well capped ahead of 112, while only back above 1377 would really compromise the overall bearish outlook for the euro. Sterling dollar. So cable continues to decline to fresh 7-year lows, with the market now focused on a retest of the 2009 multi-year base at 135, which also coincides with a measured move objective following this latest breakdown below 140.80. At this point, any rally should be very well capped back up towards the 142 area, while ultimately only back above recent highs that were seen back on the 19th of February at 144.08 would take the immediate pressure off the downside. Dollar yen. So dollar yen continues to consolidate off recent lows, with the consolidation classified as a bearish consolidation, while the market holds below some previous support turn resistance at 116. Look for the market to trade lower in the sessions ahead to take out the recent multi-month low at 110.98 and trigger the next major downside extension, potentially exposing the 107 area further down. At this point, a break back above 116 would be required to take the immediate pressure off the downside. Euro Swiss. So despite recent pullbacks in Euro Swiss from multi-month highs at 112, the market retains its recovery outlook while it holds above 107.15, with a higher low sought out ahead of the next major upside extension. Ultimately, only back below 107.15 would compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie is showing signs of topping out, with the market finding some solid, formidable resistance up towards a key 78.650 retracement at 72.65. The market has rolled over on Friday, and this could put pressure back on the downside for a bearish resumption, ultimately back towards the recent multi-year lows at 68.27. At this point, only back above 72.65 would take the immediate pressure off the downside. Dollar CAD. So dollar CAD has pulled back over the past several days, with the market in the period of intense correction following a move up towards near 13-year highs at 146.90. Ultimately, the broader uptrend remains intact, and the market could see additional declines, though, towards previous critical resistance at 134.57, going back to those highs that we saw back in September of 2015, which now acts as formidable support. At this point, ultimately, only a breakback below the 132 area would really compromise the immediate upside pressure and the immediate uptrend in this market, with the market expected to find a base somewhere in the 134s ahead of a bullish resumption. At this point, again, there is scope for additional declines in the sessions ahead towards the 134.57 previous resistance point, but then we should see the market look to base out in favor of a higher low and fresh upside. Dollar CAD. Kiwi dollar. So Kiwi continues to show signs of topping out, with the market putting in a lower top now potentially at 67.75, stalling out well shy of what appears to be a medium-term lower top at 69 in favor of the next major downside extension. Look for a break back below 65.46 to confirm and strengthen this outlook, accelerating declines towards next key support at 63.47 further down. Ultimately, only back above 67.75 compromises the immediate bearish outlook for Kiwi dollar. SPX 500. So although we've seen a nice correction in the S&P 500 over the past several days, this correction is a correction and should therefore put in a lower top ahead of the next downside extension below 1808 and towards the 1700 area further down. At this point, the market has seen a major structural shift that favors the potential formation of a critical top and downside over the coming weeks and months. Only back above 2000 would ultimately compromise this bearish outlook for the S&P 500. Gold. So gold has been consolidating above 1200 in recent trade, and the market now favors additional upside once this consolidation is broken towards a retest of the 2015 peak from January of 2015 at 1307. At this point, look for setbacks to be very well supported above 1190, with only a breakback below this level to take the immediate pressure off the top side.